Good afternoon and welcome. Good afternoon and welcome to our webinar this evening at Business Benchmark Group. We're hosting Frank Vetere and Darren Haycraft from LMP Accountants. As you may recall, for those of you that were that had joined us in May when Frank and Darren sort of demystified, I would call it, some of the stimulus and some of the aspects as it related to the initial JobKeeper, job seeker, and what have you, stimulus that was offered by the federal government and state government to a certain degree at that point. And with all the recent, I guess, movements and changes across Australia as it relates to JobKeeper 2.0, and specifically in Victoria and Melbourne, where we are at advanced levels of I guess lockdown, where we're seeing businesses that weren't as challenged earlier in this period being a little more challenged as to their freedom of movement and therefore freedom to deliver their work. In saying that, this is a 6-week period, and as has been noted within our immediate Business Benchmark Group client community, it's like a 6-week period. It's like an ice cube. You're in the freezer. When you come back out, it's going to be double shifts, and potentially your Christmas period will not be as, I guess, holiday mode as it's been in recent years. It's going to be very, very busy, and get ready for that, be structured for that. But today we're here to talk to Darren and Frank as it relates to anything that relates to stimulus and or federal and state included, and get some aspects and some points of clarity as it relates to 2.0 and what we should be gearing ourselves up for if we haven't already. So without a further ado, I wish to introduce Darren Haycraft from LMP Accountants, a formidable accountancy practice in the eastern suburbs of Melbourne, and they do their craft all over Australia. Darren, good evening, good afternoon. How are you?
I'm good. How are you?
I'm good, mate. Feeling really good, feeling pumped, feeling energized. It's an interesting, I guess, time in the world, not only in Victoria and Australia, that's for sure.
Absolutely. Absolutely.
So without a further ado, I guess, it's important for our community to hear from experts and people who are right at the forefront of advisory and authority as it relates to the stimulus and the do's and the don'ts and the points of clarity. So I'll throw it over to you as it relates to getting us started, and anyone that's listening, and we have an audience that's building right now. So ensure you're putting your questions in and asking Frank and Darren anything to do as it relates to your business, your industry, stimulus, if you have, if you haven't, if you're going to continue, what are the rules, what are not the rules, apprentices, if you've got them, employees, of course, which is a big part of stimulus. Have your questions coming in, and we'll, between the three of us, we're going to accommodate as many of these questions as we can, and I'm sure we will. And if we can't, we'll say we can't, and we'll look into it and come back to you, each of you. In saying that, Darren, I'm going to throw it over to you if you wanted to lead us from here.
All right. Thank you very much, Stefan. Good evening, everybody. As Stefan said, we've been invited by himself and his team to talk about the latest developments with JobKeeper and the Victorian grants. We'd love to be able to tell you that everything that we speak about tonight is going to be the be-all and end-all, and there won't be any other changes, but we know that that wouldn't be true. So, so we'll do our best to answer everything as of today. And yeah, if there's, as Stefan said, if there's anything that people ask and we're not sure about, we'll try and find an answer and let Stefan know so he can pass it on to you. So, so basically the starting point is at the moment we're still in JobKeeper version 1, which is the original version of JobKeeper. There's been a few announcements and a few changes along the way, but version 1 is very similar to what it was originally. There's just been a couple of tweaks. Then there's JobKeeper version 2 and version 3, and some people are saying there's points in between and version 4 and 5, but we'll try and keep it as easy as we can. Then we're just going to touch on the latest Victorian state grants. So basically with JobKeeper version 1, if you were eligible for JobKeeper version 1, that keeps running until the 26th or 27th of September. So if you find that you have had a drop of 30% or more in your turnover this quarter or this month, you can get into JobKeeper version 1 and you'll be eligible for the months of August and September. A change was announced about a week ago about the eligibility of employees. So the original rules stated that your employees had to be employed with you as of the 1st of March 2020. The new rule says that the start date for the employee is now the 1st of July. Unfortunately, this is not law yet, as far as we're aware as of today. So it's still a little bit hard to know which way to jump, but that is the intention of the rules at the moment. So basically, our understanding is that you can add additional employees that started with you between 1st of March and 1st of July, or if a casual ended up being with you for up to 12 months. Something that we found out today that's been flagged is reinstated is the one in and all in rule. So if you now have employees that should be eligible for JobKeeper because they started with you between the 1st of March and the 1st of July, you could actually make yourself ineligible for JobKeeper across the board if you don't pay everybody. So it's just something to keep in mind. But unfortunately, as I said, it's not law yet. So, which makes it a challenge when we're partway through one of the JobKeeper fortnights. So at this stage, we're advising our clients that this is what the intention is. This is what the government is aiming to achieve. So they're trying to include more employees. So we believe this will go ahead, but there's likely to be a few more changes. There might be a few changes to alternate tests and things like that, but you've kind of got to make a judgment call between now and the end of the JobKeeper fortnight, which is a real challenge. So, and unfortunately, we can't give you a definitive answer on that at the moment. So, JobKeeper version 2 and version 3. So the government announced about a month ago that they were going to extend JobKeeper from the end of September through to the 28th of March 2021. So to be eligible from the 28th of September, you're going to have to reassess your eligibility. It will be based on your actual turnover for the quarter ended 30 September. If you've had a 30% drop for the September quarter compared to the September 2019 quarter, then you'll be eligible for JobKeeper from the 28th of September until the 3rd of January 2021. So then the third round of JobKeeper from the 4th of January 2021, businesses will have to reassess their turnover again. And if they had a drop for the December 2020 quarter compared to the December 2019 quarter, then they'll be eligible from the 4th of January to the 28th of March 2021. So I know that's a lot of information to take in. We're expecting that there will be some alternate tests brought in between now and the 28th of September. We haven't heard anything about it yet. We're watching today. So yeah, there'll be more to come on this as we get a bit closer to the 28th of September.
So on that, Darren, so the distinct difference between eligibility in 1.0 versus 2.0 is 1.0 was based on the month versus the month corresponding in 19. And 2.0, it's the quarter, let's say the September quarter versus the September quarter in 19.
So JobKeeper version 1, you could rely on a quarter or you could rely on a month.
Yeah.
You also had the ability to forecast, whereas what they're saying at the moment is that it has to be based on actuals for the September 2020 quarter and then the December 2020 quarter. So there'll be no more estimating in advance or forecasting in advance. It's going to be based on actuals. So you're going to have to get your end of September figures done fairly quickly so that you can work out whether you're eligible in early October.
So that's a very important distinction for everyone listening. If you are engaged in JobKeeper and or you've recently, in recent weeks or days, engaged in JobKeeper, typically it was on the back of 1 month that made you eligible, and then your projections kept you in the scheme, and or not, or you pulled yourself out of the scheme. In saying that, going forward, the distinction that Darren just shared there is it'll be on actuals and not projections, and it will be the September quarter in 20 versus September quarter 19. That gives you access to October, November, December, and then it's the December quarter 20 versus 19 that gives you January, February, March.
Correct. But just to clarify, if you were eligible for JobKeeper version 1 and you have a bumper month in, say, May or June when things reopened, then it doesn't matter whether you still have your 30% drop. You remain in JobKeeper version 1 until the 28th of September. So once you're in until the 28th of September or 27th of September. Then once that date hits, then JobKeeper version 1 will stop, and then you'll have to put your declaration in by the 14th of October. And then at some point in October, then you'll have to check your eligibility for the September quarter.
And Darren, just on that, again, with I haven't really had this chat with clients, but you may have with your clients. If clients have been, or if businesses have been deemed ineligible because they are definitely not at 30% or under anymore, can they declare they want to pull themselves out? Or does it still keep on going until September?
You
in
can.
version 1?
You can, but I don't really understand why you would. But yes, you can. So, but I think what everyone needs to understand is that once you are eligible for JobKeeper version 1, it doesn't matter what happens after that. You remain in JobKeeper version 1 as long as you keep paying the minimum wages for your employees. It doesn't matter whether your turnover goes up or down. You remain in JobKeeper version 1 for as long as you keep paying your employees. And then once JobKeeper version 1's finished, then there's going to be a new eligibility. And that's the first time you have to rework out whether you are eligible because it's JobKeeper version 2.
Well answered, mate. Thank you.
Okay, no worries.
That was really good.
So I'm going to hand over to Frank now because you're probably sick of hearing my voice. So Frank, take it away.
Good afternoon, everybody. And I will just go through the last bit in regards to the JobKeeper, just in terms of the pay rates. So just bear with me. Oops.
So another change, as we're going to hear from Frank in a moment, the other change as it relates to 2.0 is the level per employee that's to be earned and or received has changed, and Frank's going to go through that in a couple of moments to help us just get further distinction. So over to you, Frank.
Alrighty, now bear with me. I am just having a few little technical glitches here.
That's all right, mate. It's all good.
I can't actually share that screen. So, which is...
All right, so I've got a question on the screen here. I'll answer the question, or I'll ask the question and I'll answer it first, and I'll throw over to Darren. You figure your bit out. Rob, if you're going to assist Frank for a moment, that'd be great. So we are forecasting a decrease in the September quarter. We are forecasting a decrease we were forecasting a decrease in September, but now with restrictions in Victoria, it seems like our September quarter is going to have a stronger finish than expected. In other words, we're going to be open for work and possibly working 2 shifts is what I'm reading into that. And that's a question from Peter. Yep. Does that impact my 2.0 opportunity? I would wait till it finished, in my opinion. But Darren, what do you think?
Well, if your turnover is up compared to 12 months ago, then according to the current rules, you won't be eligible.
Yeah. So my advice
so
there,
you really
Peter,
are, in my opinion, this for JobKeeper version 2, you are going to have to wait until you have completed your figures, your turnover figures for the September quarter before you're going to know whether you're eligible or not. The challenge is that a lot of businesses got in on the alternative tests in JobKeeper version 1. So at this stage, we're only assuming that the alternative tests will be the same, but we're not sure. So for clients that work with you guys that have had big uplifts in the last 12 months, you know, you're going to have to look at the alternative tests. It's not going to be as simple as, is there a 30% drop compared to last year? No, but is there a 30% drop compared to 3 months ago, 6 months ago? Then that might be enough to get you in.
Yeah, no, great answer. And from my perspective, Peter, just to finish off on that answer, if you are projecting a double shift or a hockey stick finish to the September quarter as it relates to invoicing and hopefully collections, then don't worry about JobKeeper, mate. Just go and frigging deliver your pretty butt off. Just do what you got to do and run the business and do what you got to do. And if JobKeeper is still available for you, fantastic. Don't make that your motivation. And if you need it, it's there for you. But in the meantime, you got 3 or 4 weeks, I guess, in Victoria to go and add more pain or gain. I would go with gain to your September invoicing. Good luck to you, mate. Well done. Good question. Thank you. Frank, how we go?
Yeah, I am not going to, I can't actually get this. So Darren,
Darren, you need to stop sharing.
Yeah. I'm just trying to.
Well, I'll put it up, Frank, so you can talk.
And I'll just talk.
There we go.
Sounds like a good idea.
That's all good.
All right. So bear with me. I'm just going to get the relevant screen up. All right. So, okay. So in regards to, as Darren's spoken about the JobKeeper version 2 and version 3, there are going to be some changes from the 28th of September through the 3rd of January 2021 in relation to the amounts. So it's $1,200 per fortnight for eligible employees who were working in the business or the not-for-profit for 20 hours or more on average in the 4 weeks pay periods between either the before the 1st of March 2020 or July 2020, and for eligible business participants that were actively involved in 20 hours or more. So it's obviously going to change to a tiered approach. So if for those that are actually under the 20 hours, they will actually revert to the $750. And then there's another scale drop down it goes down to $1,000 for those of 20 hours or more, and $650 for those under that threshold. Now, obviously, in terms of the steps for the first part between the 28th and the 3rd of January, it's pending upon obviously eligibility for the September quarter, and then the second reduction relates to the December quarter, so that provided that there is a drop. So obviously that's what we know today. What the future will hold, we will surely find out soon. So that basically is in relation to the JobKeeper. Now, what I'll now go and cover off on is in regards to the Victorian State Business Grant.
Before you go there, Frank,
yep.
just before you go there. So Diane Simmons, you ask, if you don't qualify for version 2, can you qualify for version 3? My thinking is yes, you can. Either of you guys answer that if you wish.
Yes, you can.
Yeah.
Yes, you can, because Diane, it's you are assessing quarter versus quarter, and then you'll have a go again at quarter versus quarter, September versus September, and then again December versus December, which is version 3. Version 2 is September. Yeah, and Sunil has asked, we are going to have, sorry?
Just to clarify that, so originally the rules did say that you couldn't get JobKeeper for the December quarter unless you had a 30% drop in the June quarter and the September quarter. And they've now changed that and said that each quarter on its own.
Good clarity. Sunil has asked, we are going to have a large month from mid-September when lockdown is released due to a backlog of work. So it's unlikely that we will not be eligible if we compare it to September, October last year. Is this correct? Well, October falls into the December quarter. September is the last month of the September quarter. So Sunil, it's you are analysing, in fairness, you'll be analysing July, August, September 2020 versus July, August, September 2019. So quarter one versus quarter one, financial years, of course. And then you'll be analysing October, November, December, quarter two, 2020, October, November, December, 2019, quarter two. That's the way that works. Amanda asks, if staff are still working a full week, do you have to top up annual leave or should the employer pay the hours worked?
It's a good legal question to ask.
So my mail on that, do you guys have an answer on that or do you want me to go first?
No, you can go.
Okay,
Yeah.
this is definitely HR. But it does relate to all this. So Amanda, if staff are still working a full week, do you have to top up annual leave or should the employer pay the hours worked? Now, I reckon there's one or two words missing in your question, but I'm going to assume you're referencing to if they're on JobKeeper and you are paying the difference to their full week, then annual leave is annual leave. They're working a 38-hour or 40-hour week, whatever you're on. So I'm not sure how the top up on annual leave as it relates to your question works, but the hours work, if you're on stand down, and working only up to the $1,500, then that's a question you should be asking your HR consultants. And if you don't have one, reach out to either EmploySure or KLC Recruitment, who's a client of ours. They did answer this yesterday, Amanda, on the round table group. You missed out an opportunity to hear it there. But Stephanie and Chris gave us 10 minutes on how that works yesterday afternoon. So if you go to the recording, which you would have access to, Amanda, of the round table group I ran yesterday at 5 p.m, in the last 10 minutes, if you want to fast forward from all the other stuff, at exactly 5:52 p.m, yesterday, you'll hear the answer to that question. Thank you.
Okay.
Frank, back to you.
No worries. Well, we'll go on to the Victorian State Government grant. So this is the business support, and this is the second one that they had released. So obviously, this is actually for businesses in Victoria that were participants in the JobKeeper scheme, and they employ people that are and are also registered for WorkSafe as of 30 June 2020. They've got annual payroll of less than 3 mil on an ungrouped basis. They're registered for GST, hold the ABN at the 30th of June, and are registered with a responsible federal or state regulator. So the sole traders, unfortunately, on this one, basically missed out because well, if they don't actually have any employees. And it's $5,000 for regional Victoria and 10 grand for metropolitan Melbourne. So that's in terms of the stage 4 restrictions, those ones that are affected, and including the Mitchell Shire. Originally it was 5, and if you did do your application for the 5, you don't need to apply again, and effectively you should get the additional 5. And if you haven't yet gone through that process, you can still, there's still a bit of time, as the applications for that one actually stops on the 14th of September 2020.
Yeah, so the key to that gate is definitely, if you're on JobKeeper, then it's a very straightforward opportunity. If you're not, I'm not sure how that plays out. But if you are on JobKeeper, then fill out the application form, and literally it's a $10,000 little icing on your cake. And for many, that's a significant icing. And why shouldn't you? I mean, the state government has certainly, it's doing its best to keep the health side of things sorted. And we can't sort of point the finger at what they didn't do months ago, but what they're doing right now is the right thing. but it's hurting business, it's hurting the economy, and they're doing their best to help, through this sort of fund. And we have had a number of our clients today, actually, they applied for it about a week ago, and the money's starting to land today. So it's certainly there, it's real, and it's applicable for everyone that has, in one way or another, been involved in other stimulus. Is that correct, guys? Like the JobKeeper payment scheme, if you've got that over the line, then this one's a no-brainer.
Yeah, it's one of the questions. So, so you have to put in your JobKeeper enrolment registration number or one of the monthly declaration numbers. So our understanding is you can't get it without being on JobKeeper.
Yeah, that's right.
It's actually a requirement.
Yeah, and then you also just, for those that haven't enrolled in it yet, you just need to give the government, or this application just needs to know, and you're given a choice of 4 areas, and then it's other. Where are you going to be spending the money? Where are you going to be investing the money? And it's fairly straightforward. It's literally a 10-minute sort of application, from what I understand from a handful of clients I've supported through this. So please don't hold off on this. I mean, it's there for you. Many of you that are definitely impacted in this period, particularly in our Melbourne clients, your revenue is going to be down for August. Register for the JobKeeper payment scheme. We've had at least 7 or 8 of our clients that weren't on JobKeeper have registered about a week ago now, because our prediction for invoicing this month, that is August, is low. It's down. It's definitely 30% down on last year's invoicing. So if you haven't enrolled in JobKeeper previously, you can still do it up until the last fortnight, which is in September. If you have enrolled in JobKeeper, make sure you are definitely putting 10 minutes aside to put your hand up to Daniel Andrews to help you out with this one. It's $10,000 if you're in Metro Melbourne. It's $5,000 if you're in regional. It's there for you. Go for it. Got a question here, guys. Brad asks, I'm one of those businesses that have had a much higher turnover from 12 months ago, 35K last August, and have been averaging $100,000 a month lately. Firstly, Brad,
Great.
Congratulations on
Well
having a 3X on revenue. Amazing. Hopefully your profit has also come the same way. I've been holding off invoicing this month because I'm unsure if it will lock me out of getting JobKeeper. These are progress invoices with builders, etc. Now,
get the money in, Brad. Get the money in.
Cash is king, my friend. Now, in saying that, and we are on camera, the fact that they're progress payments, if your money in the bank, if your cash in the bank is of a level that you have oxygen to breathe, hold off on the invoices, man. If you need those invoices to be not only invoiced, but collected because you are not far from asphyxia or death, deliver the work, deliver the invoices, get the money in. Cash is king. Cash is king. JobKeeper is not king.
Well, just the other thing, Stefan, from Brad's point of view, do you actually have JobKeeper already, or you haven't?
So Brad, if you already have JobKeeper, you don't need to stress. Keep on invoicing.
Yeah, because the other thing is that if he hasn't got JobKeeper with such an increase, he could possibly go down the alternative test and get the JobKeeper based upon the alternative test, which was covered off in our last seminar. To give you an example, let's say that a year ago, like as you said, you've just jumped by 3, but let's say that was the figure about a year ago. But between say this month and say last month, for example, you've an average of the 3 months, you've had a drop of 30%. Then you're actually in a position that you can become eligible for JobKeeper.
So there's the distinction, Brad. You have an alternative test opportunity. The alternative test, if month on month or quarter on quarter, you're 30% down, which is one of the, I think there's 8 or 9 various tests there.
Yeah, there are.
You have an opportunity to keep the wheels spinning with JobKeeper as well.
Yeah, and the thing is, the alternative test from version 1, obviously that's all finalized. And in terms of version 2s and 3s, at this point in time, there's absolutely been nothing. We expect there to be something, but the thing is, while the actual alternative test is actually in play, you should really get that looked into to see whether you're eligible or not.
So again, reach out to your accountants or compliance advisors there. They should be able to give you literally in 30 seconds the exact answer. If you're having trouble there, reach out to Darren and or Frank. If that's an issue, then come to me.
Yep, that's fine.
But I'm not an accountant. These boys are. No, he doesn't have JobKeeper. 80% of his work is on hold at the moment, though.
Right.
Okay, hang on. If 80% of your job is on hold, and if I think it's the Brad, I'm thinking the solar boy, apply for JobKeeper now. Just register, man. Don't think about it. You are definitely eligible this month for JobKeeper as it relates to last month and the last 3 months. So register, because you're not going to have anywhere near a $100,000 month in August. Okay. Well, questions we're answering as we're going.
Yep. That's right.
Just a question for you guys. Obviously, there are industries that, again, continue to be more impacted. Definitely retail, travel, hospitality, anything that's in the physical space, anything that has a congregation of people. Those industries specifically continue to have a very long and painful journey through this COVID in Australia and since late March 2020. What do you guys recommend or suggest for as it relates to they're holding, they've got the tenancy, they've got the rental, I guess, stimulus, they've got the federal and the state stimulus. What else is there for industries that are definitely on a very low level, and they're sort of still holding on, I think, with a bit of hope and faith that this thing will go away, and it will. What are you suggesting as accountants to clients that are running businesses in those industries?
Speak to your bank.
Yeah, bank. That's right. Get in contact with the bank.
If you can get to a point where your bank's willing to hold off on loan repayments, your landlord's willing to hold off on rental, you're getting JobKeeper for your employees that are still there, then a majority of your expenses are covered. Outside of that, the ATO have been pretty good with payment arrangements and things like that. So, I'm just telling them to speak to all their major suppliers and everyone that they owe money to and just put them on hold. But I think you guys talk to clients a lot about, pivoting the business and changing their focus. And, I've got a travel agent as a client that started selling different products online. So, it's just a complete spin around for 6 to 12 months until the industry gets back on its feet. So, and some in particular, they're literally just putting their business on pause for 12 months and going and getting a job elsewhere. Basically, they're just doing whatever they have to do to survive. So it's unfortunate, but yeah, as you say, there are a few around like that.
Yeah. So the key points there are definitely continue that conversation as it relates to, where is the cash moving and or not moving? The banks will support that. They are. Asset finance as it relates to banks or money lenders will support that. Landlords, although there's going to be a ripple and a second, third, fourth order consequence from all this, and the banks are also aware of all that, and we're talking a 2, 3, 4 year ripple here, they are on the majority. If you've been a reasonable tenant and you keep the conversation really elevated and alive and well and healthy, they'll support you, as you also need to support the landlord. Ensuring that your suppliers are communicated to. If you feel like, if you're a Metro Melbourne business right now, regardless of industry, if you're a Metro Melbourne business and you are seeing in your 26-week rolling cash flow that you're going to have a slowing down of releasing money from your bank to your major suppliers, please don't wait till the end of August to talk to them. Particularly our clients, you know today what's happening in your bank for the next 26 weeks. And if week 4, 5, and 6 is looking a little iffy, jump on the phone today, tomorrow, talk to your major suppliers, keep that relationship alive, keep it healthy. Don't be the majority that's not going to talk to them and then they're going to be chasing you. And that's just not what you do to good suppliers. You talk to them, you communicate with them. It's a leverage in finance to be able to do that. Next question. How do we restructure? Is this a good time to be restructuring our company?
No.
And what I'm thinking is, because that's from Sonia. So Sonia, if you can give us a little bit more on that. So when you say restructuring, are you a sole trader? Should you be a proprietary limited? Are you a trust that needs to be something different? We need to know a little bit more on that so the boys, Darren and Frank, can help you a little further.
From a cash flow forecast, the cash flow boost, the answer would be no. So for people that don't know about the cash flow boost, that's the where you lodge your pay-as-you-go withholding that you basically get to the credit back. And let's say you decide, look, we've come across a few people wanting to restructure on the 1st of July because their previous accountant thought it was a great idea. I said to them, look, it means you're going to lose your cash flow boost for the September quarter. So, look, it just depends on the scenario and the reasons why. But yeah, look, if we have a little bit more info, that will help.
So the PAYG boost, which was the first one that came out.
Yep.
And that was such an exciting sort of, oh God, I'm going to get $100,000 in credit here. It's almost become like a forgotten little thing out there. However, this is a good opportunity, and I think for many of our clients, this would be really cool to hear. Just let's polish that one again.
Mm-hmm.
How is that playing out? So can you just pretend we don't know anything about this?
Yep.
We've realised, shit, it's July, August, September, and October.
Yep.
If we were eligible for the $50,000 version of that, or different if we were under the other threshold, how does that play out? Can you give us a rundown on that?
Yeah, yep. Okay. So originally there was the first part, which was it was 50K. And then the second tranche. So obviously, if you had pay-as-you-go withholding, up to $50,000 would be credited back from the ATO. And in regards to the second deal, oops, a sec, sorry. Okay, in regards to the second lot, it's actually going to be, it's basically going to be matched. So depending upon how you lodge, and let's assume that someone lodges on a quarterly basis, they would get 50% of what they received in the first lot when they lodge the June BAS, and then they will get the next lot in the September BAS. So in regards to the cash flow boost, as I've sort of mentioned earlier, is that if, say, someone did restructure as of the 1st of July, in order to get the September one, you still need to be trading. So you would actually lose out if you were to restructure. So that's basically it. So it's in total, it's $100,000. It's definitely, and that's probably a decent one when you've got a few employees. That's a really good one. And with that one there in particular as well, it's also not taxable as well. So which is even better.
Yeah, great. And let's just go back a little on this, because I think this is almost coming like a bit of a surprise for many clients as we speak, or businesses in general. So back in March and April, PAYG boost, the realization that you were going to get a $30,000, $40,000, $50,000 credit almost in that month and spread over the next 2 or 3 months was a great initiative, in my opinion, as it relates to the government doing the right thing. And then the second component, so BASs were paused as well, like the payment of BASs were paused for the March quarter was paused. And correct me if I'm wrong, are they due now?
Yeah, the 25th of August is the next slot if you lodge it via your tax agent or accountant. So that's the 25th of August. So if you lodged it now, and in many cases, you've got to think of it, is that you'd actually get part 2 and also part 1. So in most cases, I've had a lot of clients that we've done their activity statements, they've actually got refunds.
Correct. So just another little warning bell for our clients specifically, and obviously everyone on the call. Don't delay your BAS activity statement. Ensure you're getting it in, because there's another, again, clear the decks, be up to date. Make sure your 26-week rolling cash flow is updated to reflect on exactly what's happening in that 3rd, 4th week of August as it relates to your BAS, which goes back there, and your PAYG boost, which is coming. So ensure you're creating some accuracy, because it's accurate numbers now. It's not projections now as it relates to that. Gary asks, does JobKeeper jeopardize with any future borrowings for growth in the business? So JobKeeper is, from my understanding, I'll pass over to the guys in a moment, JobKeeper is analysed on operational income, not other. Darren?
The only concern I would have is that banks are asking what the impact of COVID has been on businesses. So I had to write a letter today for a client that was applying for additional finance, and the bank's first question was, how have they been affected by COVID? So if you're eligible for JobKeeper, the bank's going to know straight away that your turnover's down. So how that compares to what that impact on profit is over the longer period will impact on your borrowing capacity with the bank. So unfortunately, from what I've seen in the last couple of months, the banks are heavily asking questions about COVID. So I think they're going to ask the question anyway. So if you say that you got into JobKeeper to give yourself a bit of extra cash flow, but you're coping, your profit hasn't dropped, some businesses' profit's gone up. So as long as you can put an argument forward to the bank, especially with the support of Stefan and the team here, or your accountant, then you should be okay.
Yeah, so that's an amazing accountant's answer on that one. So I'll give you my answer on that one, which is exactly the same, just a little twist on it. If you can demonstrate operational cash flow will continue to be healthy and sustainable, the bank will back the jockey on that horse. If you can demonstrate the impact of the borrowings will support the sustainability of cash flow and the growth of cash flow, they'll back you. But they will know that you've used JobKeeper, and to a certain degree, there's nothing wrong with that. I mean, how many millions of businesses in Australia have used that? So that's how, again, the complementary aspect of what Darren and Frank do and his team and what we do, and together we meet in a place that elevates clients to a level of benchmark, let's call it. Sunil asks, where do we find more information about the cash flow boost, please?
I
told you, this one, mate, it's a forgotten one, this one. It doesn't even get mentioned.
There is actually a really good website that I've actually come across.
So Neil, can you send to Frank your private email?
Yep.
Send to Frank your private email. He'll attach that website to you. And maybe you can have a chat about Frank and Darren becoming your accountant going forward.
Mm.
That'd be a good idea, in my opinion.
Yep.
And I don't know who your accountant is, but to have a chat with another one is not a problem. It's a good thing. Keeps the current one honest.
Mm-hmm. As
with coaches too, by the way. All right, that's good. So just give us the website anyway, Frank.
Oh yeah, so there's if you go, it's HTTPS. If you type digit.business/PAYG-cashflow-cash-boost-calculator, is actually, if you actually put in your figures of your BAS in terms of your pay-as-you-go withholding, it actually comes up with a graph of the actual what you're actually entitled to in credits. So I've actually utilized, because I love my Excel spreadsheets and I love my diagrams, but when I actually found this this site, I thought, wow, it could have saved me a lot of time.
Yeah, alternative to that website, which had a lot of PPSs and ABCs,
Yep.
just reach out to Tyson and we'll do it for you, mate. Sunil, reach out to Tyson and we'll do it for you, not a problem. And in the meantime, reach out to Frank and have a chat with him and or Darren. All right, we're almost at the end. I just want to make sure, just again, from our perspective at Business Benchmark Group, LMP Accountants, you've been in our space as one of our community members for a few years now, and we get amazing feedback from the clients you guys work with, and we again we feel comfortable in coming to you to get some to the point, no frills, no rah-rah feedback on the state of the compliance world, particularly this year with COVID and all the ins and outs and ups and downs. You guys do an amazing job, amazing business, good solid team, great standards and awesome customer service and customer care. So anybody that's needing a conversation if needed, and if you've got something that's working, please, you don't need to change something that's already working. We wouldn't be implying that. But if you're needing to get curious, perhaps you're at a crossroad, and it's not unusual occasionally to be at a crossroad of perhaps needing a new accountant and or speaking to someone that might just give you a different perspective. Both Darren and Frank are very, very approachable, and they're also very loyal to the fact that if something's not broken, let's not go and complicate it. So decent human beings running a great business with a great team, and we totally support what they do and how they do it for a small, medium business anywhere in Melbourne and Australia. So reach out to them. Rob, if you don't mind, if you don't mind putting the boys' website up, that'd be great. And time for one last question, if there is one. I'm going to count to 30 backwards. No, I'm not. 30 seconds as I'm finishing off with... So how do you predict the end of this year, guys? I mean, what are you guys seeing? I mean, we know what we know, and we certainly have a lot that we don't know. But what are you guys predicting?
Well, look, you can go, Darren.
Yeah, I mean, the challenge is whether Victoria can get control in the next month or two, because like one of your clients said before, one of the attendees said before, yeah, they're going to have a boom couple of weeks in September as long as we get control and Dan the man is willing to open up again. So, yeah, so I think everyone's itching to get back into it. I think the period of time when we were open again showed that business was ready to go, and a lot of people made a lot of money in that period. So I think it'll be a great lead into Christmas if we're open and stay open. So.
Yeah. Frank, do you want to add to that?
Oh, look, pretty much it's pretty much the same. My thoughts are the same. Look, it really comes down to what we can and what we can't do. And I know, look, a lot of people sort of look to see what's happening overseas, and you know, like I think the latest was that now New Zealand have got their 3-day lockdown. But the thing is, you can't really look at what's happening around the world, because the thing is, this virus and just whatever's here. So at the moment, no one's, besides people coming from overseas, coming home. But look, I actually think, I look at it from the point of view saying, well, you know, it might be a little bit longer than the 6 weeks, but I think we'll get out of it. And I think what people need to do is actually be ready to get on their horse and ride it when we get out. And I think it's just about conserving, getting your energies ready, because look, this year has been a big challenge, but look, life, that's what happens with life, you know. You just throw these challenges and you've just got to ride and just see how you go. So yeah. I think by the time we get to Christmas, might not be that the normal thing where you know, we'll be able to go overseas or do any of that. It'd be very different. But look, I'm sort of expecting that as we sort of get to December, that business will be as usual. And as I said, that's where we've got to make sure that, you know, we keep running with it.
So if I go back to the crystal ball that I shared in April, June was going to be the toughest month. September, end of September, was going to start seeing some recovery. And by December, we would have been back to something normal. Now, bar a few freaking full moons, we're not far from that timeline. And in saying that, it's cool heads that prevail, no matter where you are in the world, and specifically for our business owner friends in Melbourne and Victoria, cool heads prevail. And in this spare time, if it is spare time, and there's no such thing as friggin' spare time, you should be thinking about the impact you are making on your working progress as it relates to the 14th of September onwards, when the sun rises at 14th of September, sun will rise at about 6:15 a.m. and the sun will go down at about 5:48. So within those hours of sunlight, you have 2 shifts for which you are going to go full bore on to deliver backlog and or opportunity that you're created in the next 5 weeks. And if you do that, you're going to be creating the most amazing problem for yourself and your business called, how the hell am I going to deliver all that? And therefore, you don't need cash flow boosts or freaking JobKeepers or any stimulus, because you're going to be so stimulated to go and whack the opportunity head on. Go to the biggest doors and knock very hard. This is your moment in the sun. Thank you, Frank. Thank you, Darren. Great sharing, really simple, easy to understand. If anybody has any further questions, please reach out. In the meantime, have a great evening. Go to your loved ones, give them a hug, give them a kiss. They need that. Power to you.
See everybody.
Thanks, Stefan. Bye all.
Thank you.